Hey guys, this is Eric Bramlett with Bramlett Residential, and today is February 10th, 2023, and we're going to discuss the January first look market statistics. First, hope everyone made it through the ice storm last week safe. I hope your power is restored, and I hope it wasn't too troublesome for you. Weather this week is awesome. It reminds us why we do like to live in Austin, Texas. Hope you're able to get outside. So let's go ahead and get started with some of the basic stats. So what wasn't incredibly surprising this month, and what doesn't look awesome but not terrible, is total sales, and those dropped 33%. And then the pricing data that we saw, and that is that we're seeing average prices decline anywhere from 2.5% for average sold price to 9% for median sold price per square foot. These are all different measurements of sold price, just different ways to look at it. No one is right or wrong. We generally gravitate to average sold price just because it's a little easier to understand. A couple other things to notice. We're at 3.9 months of inventory. That's technically a balanced market. Feels a little more sluggish than that because of the market shift. And then average days on market, 65 days on market. This is versus 25 days on market in January of last year. Sellers really need to reset expectations in terms of how long it will take to sell a property. If the average is 2 months, you need to go into it expecting that it's going to be, a longer process than it's been in the past, and just assume that when you go into it. So the good news, under contract and pending units only declined year over year by 16.88%, and I say only because we've seen the numbers quite a bit worse than that in the past. So if we look at this chart, we went ahead and graphed. The up is good on this one. We graphed the percent of total. So you can see last April is 89%, and so it declined 11% last April, and then we went to mid-year and it declined 71%. I'm sorry, it had gone up. It was 71%, so it declined 29%. And then if you look at what we think is the valley, in October, November, it was down 40%. We were really, really low in terms of contracts. So this month it went way back up. We're at 83%. Only a 17% decline. That's a really solid measurement of demand, and it shows that buyers are getting back into the market. Since we're looking at year over year, it does take into account seasonality. So we're looking at January 23 versus January 22, and the numbers look pretty good. What is not altogether awesome, and another way to look at it is, if you look at resale units, which this is actually City of Austin where most properties are resales, it declined 25%. What we're not showing you here, we did run the numbers for resale properties only, and there was a 27% decline versus January of 2022. What that tells us is that the builders are satisfying a lot of this demand that's re-entered the market. So two ways to look at that, depending on if you're a buyer or a seller. If you're a buyer, there are some really awesome deals out there to be had if you want new construction. If you're a seller and you're in a market with a lot of new construction, you need to get pretty competitive with pricing because the builders certainly are. Builders are slashing price in order to move units. They're doing that because they have zero utility for the properties. They need the stuff off their books, and they're going to have to get through all of their supply before we'll start seeing that normalize just a little bit. So let's look at price. We charted this or graphed this against mortgage rate. It's really good to see pretty much a straight line increase in mortgage rates up to November, and then that's when everything started stabilizing, and we're back at 6.4% here, and then you can see there's a decline from the peak in May. The peak was, I believe, around 730, something like that, and we're down to 563. But what you want to see here is that prices have flatlined. So in December of 2022, it was within a couple $100 of January 2023. What we think that means is that we're hitting the valley right now. We're hitting the trough. We do think that on a month-over-month basis, we're going to see prices start to go up a little bit. Nothing like last year where we saw an 18% increase in the spring. We don't know where it's going to stand, but probably somewhere between 3-4%, maybe 5 or 6% on a good day this spring on a month-over-month basis. So still that story has not completely been written yet. We'll know more when we get into February and we get into March. So this is just an interesting chart to look at, and this shows you the average monthly payment based on the prevailing interest rate. So in February, and we didn't put it on the chart, I wish we had, 3.66% interest. and then you were at, I believe, 5.3% in May, and then we're now at 6.4%. But what's interesting here is that it was more expensive on a monthly payment basis in May of 2022 than it is today. So it's cheaper to borrow money and buy a house in Austin now than it was at the peak. We're obviously more expensive than we were in February of last year. Rates would need to get down to 5% in order for it to get that inexpensive again. But we don't think that rates will need to get to 5% in order to see prices tick up a little bit. We feel like Austin's pretty good value. We feel like people will pay $4,000 a month to buy the average house in Austin, Texas. So that's what we have for the month. We look at this stuff every single month. Be remiss if I didn't mention always real estate is hyper local and hyper situational. Every submarket does behave differently. So if you have a specific situation that you'd like to discuss, reach out to us and we'd love to chat with you about that. We'd love to help you strategize what's in your best interest. So reach out. I hope everybody had a great week. I hope everybody has awesome plans for the weekend. And again, I'm Eric Bramlett. If we can help you guys with anything whatsoever, shoot us an email or give us a call. Thanks a lot.